Welcome back to Trading Day. Well, oil prices have tumbled in the latest session as oversupply fears continue.
North Sea Brent down nearly 8%, barely hanging on to the $30 a barrel range. That's after the International Energy Agency, the IEA, warning the global oil glut could grow even further throughout the year, with prices not pushing higher anytime soon.
US crude dropped over 6%, down below the $28 handle, with the IEA describing the recent rise in oil prices as a false down, claiming speculation about an OPEC production cut, hopes for higher demand and the prospect of a weaker dollar, all unlikely to come to fruition. We do just have some breaking news, though, we're going to interrupt with, and that's Australian Pacific Coal says Nathan Tinkler has resigned as Chief Executive Officer. So we might just take you through this breaking news in the middle of this story now, because it's been a long-running sort of issue here, hasn't it?
It reached its sort of crescendo even yesterday with the bankruptcy declared in the court, which is subject to appeal, so that wasn't case closed finally, but really came down to debts on the corporate jet, something that Jerry Harvey had counselled against doing. Mr Tinkler knew better, though, on that score, went for the private versus the commercial aircraft option to get from A to B and C to D.
You spoke to him not long ago on the show, and was he saying anything about, you know, going forward?
Well, I mean, he was comfortable that funding was locked in terms of their accounts, and that their numbers from the next couple of sets of numbers were going to be relatively rosy. But again, this, as you say, just coming through now with the we'll just also see if we can get a share price on it, because it's a pretty trading hold on that on AQC in the event. So resigning as MD, just coming through the last few moments.
And CEO. Of course.
Right. We'll continue to watch. Peter, reaction on that one, just in terms of now we've seen Clive Palmer, Nathan Tinkler. What does it spell and say to the mid-tier space here, where there's this inability to hold the line in the midst of all of this volatility?
Well, good morning, Carsten. Good morning, Ingrid. You've only got to spread your mind across the whole complex, and we're seeing numbers coming out from the IEA. You're looking at all players across the whole commodity complex are under pressure, and that's been demonstrated by this morning, and of course from the likes of the BHPs all across to the Saudis. Balance sheets are hemorrhaging, and what impact that has to returns to investors, bank debt, and so on. People sometimes have to fall on their sword.
But these are people that front and they solicit investors and investment. We can extend this along to the line of T. Boone Pickens, who notably just days ago said oil was at a bottom and it was only going to double in the next few months. And what happened in the next few days? He sold all his holdings. So that speaks to double talk. I mean, it's bad enough with central banks, but what about in the market?
Well, that's right. Look, that's very hard to comment on. I mean, when you think of those sort of ramifications, you think of that behaviour. It's certainly far from ethical, and it's.
So where's the risk management and even people being able to go on and say that sort of thing?
I don't know. I mean, you would think compliance would have and ethics would have matters to deal with in that sort of regard. Company directors and everyone's held responsible, but for anyone to come out and say they think that crude prices are going to double in the short term, I find that that's quite preposterous. If you look at the IEA's numbers and if you look at what's going forward, you can only think that it's going to be a softness from here.
And every time you see it sort of bounce back a little bit, then overnight we see a bloodbath on oil markets. 7% plus falls.
Yeah, I mean, I've had a very sleepless night due to the markets being up since around about 11, then you'd nod off for maybe an hour or two, and what we've seen over that period of 5 or 6 hours, we saw hemorrhaging as far as the US Dow, then it recovered, then you saw the crude market, and when you look at the numbers, I mean, down 4, 5, 6, it was just building as the night went on. It's very alarming.
When, Peter, does an OPEC deal become likely?
Well, if you looked at Sunday, and that proved it once and for all, I think, you saw the Venezuelans meet with the Saudis and they wanted to see some form of gluing something together, and there's been no tangible effect moving forward, and that was probably demonstrated with the market falling over the last 2 trading sessions. You've got the IEA and their forecast, you've got the API as far as the American Petroleum Institute. Their numbers are released over the next matter of hours. It's all fairly gloomy if you're looking at far as production and consumption numbers. So at the present time, you'd have to say that it's very, very good for consumers and not great if you're a producer.
And this idea of the Obama tax on oil, this $10 tax proposal, where does this come from?
Well,
it's just
again, the end of your tenure. You've been there for 7 years, and sometimes presidents come out with these these ways to increase revenue, and they can do what they want to do, I suppose, if you're sitting in that position.
Timing couldn't be worse, though. Let's talk gold, because it's been a very interesting play. A lot of safe haven rushing to those assets. Is that something that you can see continuing, that safe haven play, or is it only short-lived?
Well, I don't know. If you put your mind back about a week or week and a half, it's been a very solid move up of probably around about 6%, 6.5%. Who's to say it can't go further? You saw what happened as far as the SPDR, which is the largest ETF fund, and they had tremendous numbers moving into there were numbers coming out as far as last Friday. So you've had a very solid uptick, big buying as far as that gold-backed ETF, and you would have to think at the present time that most people are long. If you've got shortage and you've got people are short as far as the crude market, you've got uncertainty as far as what's going on with the Japan currency and, of course, with the US dollar, rate increases and so on. So they've all moved into that safe haven.
Let's finish really briefly on nickel. We flagged Clive Palmer. The price action here, I mean, the correction we've seen, it's not stopped by any measure.
No, far from it. I mean, we've got numbers there, 7,900 a metric tonne. Putting your mind back to about 2009, just for the viewers' sake, it peaked at 52,000. So that just shows you not only the volatility, but what can happen to commodity markets. And then when you're thinking of what Goldman's are coming out as, they're saying that 16 and 17 are going to be frightful years for aluminium and copper, with copper a forecast here of $4,000 a metric tonne. Only a matter of years ago, you were at nearly 11,500 a metric tonne. So there's no sunshine there. One thing about the Chinese, you have to put that in some context. They're buying big numbers as far as nickel.
Fair enough.
Fortunately, we'll have to leave it there, Peter, but lots to talk about in the commodity space. Appreciate your time on the show today. From xm.com/au there, Peter McGuire in the studio.